Welcome to another stock market weekly update. Sunday, December the 11th, after the market closed on Friday, December the 9th. So we've had some, as I was forecasting for the last 2 weeks. So very bullish upwards action overall, and if you've been long some individual stocks, as my members have been, and there's been some good gains with the wind in your sails, which is what we're trying to look at on a weekly basis here, is which way's the wind blowing, so that our ships, our individual stock plays, have the wind in their sails. So what's going to happen next? Let's look at that now. Take our best guess at it. There's kind of two conflicting things what I see for the week ahead. The good news is there's no question about it. I mean, if you look at this chart here of the New York Composite, the overall US market, I mean, this is just incredibly bullish action. Decent volume, and I mean, this, it's very, the market's on a tear, and it's that whole December, the traditional thing called the Santa Claus rally, is well underway this year. I think what's kind of going against it a little bit is it might have got a little bit too far too quickly, and that's what you see here in this shaded area up here. The R, it's kind of, I call this like my health indicator, and it's obviously very healthy, but it's unusual for the market, the overall market, to stay as elevated as that. It has got room to run though. The Federal Reserve meets this week. They're expecting a rate rise. If the rate rise is higher than they're thinking, or they don't raise rates, that could mess things up a little bit. Whilst I'm not, saying it's calling it anything kind of bearish for the short term this week, I wouldn't be surprised if things at least leveled off a little bit, caught their breath. But it's not something that would make me want to bail out of any long trades I've got right now. So I'd say it's definitely the trend is definitely upwards, and let's not fight the trend. But we've got some conflicting forces there that may make it a little bit of a might level off a little bit, maybe, and pull back a little bit, which would actually be healthy. If it pulled back to just say even just 11,000, I mean, that's still healthy action. 11,100 here would be ideal. And here's just the longer term chart here. You can see the all-time high on the NYA was about 11,228. So if the NYA can get up, it's not far from it at all, another 40 points away, then that really will be a confirmation of the kind of surprisingly bullish uptrend in the face of so many things that so many mines that could go off in the global economy. But the market is the market. We don't find the trend, either get out the way or join in the fun. Just as a final look here, here's the bull market that started in end of 2009, and it's definitely had its ups and downs. It's not been a consistent one, but there it is. It's looking like it wants to have a go at a second wind. One final observation I will say is that for a market to get that extended from its 40-week moving average as it is right here, it's not long before we hit, just comes back to earth a little bit, as you see here and in here. So that's another thing that's kind of a little bit tempering things a little bit. But best guess, we will see what the week tells us. Speak to you next time.